We have seen so many rate cuts, whether it's on mortgages, whether it's on deposits, and even down payments being reduced. How effective will all of this be in trying to shore up the economy, especially that very important property sector?
Yes, well, I think that at this point, these announcements that just came overnight, essentially allowing cities to lower those down payment ratios, very critical because depending on the city, you've got some really, really high barriers to entry for homeowners in China. The other thing too is allowing or encouraging these financial institutions to cut rates on existing mortgages. This isn't a massive stimulus measure on its own, but I think that in combination with a lot of, stuff that the drip feed of policies that are coming out of China can actually be fairly effective. Bloomberg Economics estimates that these latest mortgage cuts, for example, larger than we had initially expected, and could, potentially contribute to the same impact to the economy as, say, a 15 basis point policy rate cut. With the PBOC cutting rates earlier in August, there's expectations that there's going to be additional stimulus measures on that monetary policy front, including potential additional policy rate cuts through the end of the year, maybe a reduction in the reserve requirement ratio, so the amount of cash that lenders have to keep in reserve. All of that could effectively contribute, BE says, to maybe providing around like a 1 percentage point lift to GDP for 2023. So really, actually, quite a substantial amount of support when you're combining this drip feed. And I think that that's certainly helping to somewhat of an extent. Again, we're not seeing any kind of like giant flashy bazooka style stimulus coming out of China, but that is enough to kind of help so far.